Hello, my name is Rene Gorham, and I'm the President and CEO of BioSyent Inc. Today we announced the Tibelia asset acquisition, and the purpose of this presentation is to provide you some additional background information. I'd like to draw your attention to our forward-looking statements disclaimer. So today we executed an asset purchase agreement with the trustees of Novolone SA and Mithra Pharmaceuticals. Our subsidiary BioSyent Pharma Inc. made the acquisition. We have paid 2.8 million euro for the assets, which represents less than 5 times EBITDA. We've acquired the global rights to Tibelia, the so-named Tibelia assets of Novolone, the key distributor and supplier contracts. I'll speak a little bit more about that. Patents, trademarks, trade names. We have acquired the dossier for Tibelia Tibelia, all of the product data in the development of the asset, and the regulatory files. We've also picked up some inventory around pharmaceutical ingredients and packaging inventory that will be used in further supply of products to customers. So what is Tibelia? This is a hormone replacement therapy for treatment of vasomotor symptoms and prevention of osteoporosis, both of which in postmenopausal women. Tibelia, the chemical compound, has been available for over 30 years worldwide. Novolone developed Tibelia and the intellectual property assets around it and has supplied the product to partners in 20 countries. BioSyent Pharma, the acquirer, has been marketing Tibelia in Canada as Tibelia since 2020. So if you've been following us, you'll note that we report quarterly on how that brand has been progressing since we launched it, I believe in July or August, the summer of 2020. So along with this acquisition, there's no manufacturing site. We have acquired the contractual relationships to the entire supply chain, but there are no physical manufacturing assets that are included. In that regard, this acquisition aligns very well to our asset-light business model. There are no people that come along with the acquisition, nor do we envision at this point in time having to add any additional staff to integrate or to manage this business. And we'll continue to supply the market through contract manufacturing. The assets lend themselves well to kind of our operations today. I've already talked about the fact that we're not adding headcount. We see minimal integration risk with this because of both the lack of people integration. We have also got a bit of experience in managing distribution and marketing arrangements with partners outside of Canada. We do that now with our Ferromax business. We've got a great deal of experience in working with contract manufacturing partners. And so we think the integration risk on this acquisition is low. The assets that we've acquired will allow us to supply these 20 customers globally, so that drives incremental revenue. I'll speak a little bit more detailed on that in a moment. It will allow us to expand distribution of Tibelia globally to new markets where the asset has not been exploited, so that provides us with some revenue growth potential. And then back to my comments about what we're doing with the brand in Canada. So if you've been following along, you'll see that we've been growing this business nicely, and this asset acquisition will actually lower our cost of goods. So we'll have a direct relationship with the contract manufacturer, and on our business in Canada, we'll get quite a lift on our gross margin and, quite frankly, our operating margin on this business. As our sales in Canada grow, the benefit or the potential kind of incremental EBITDA margin that we can earn on the business grows even more so just by every 28-day supply of Tibelia that we provide the market in Canada. So what are the financial benefits to BioSyent? Novolone had sales of this product globally of 2.1 million euro, so that's $3.1 million Canadian. But that included their share of profit, if you will, or also a royalty deal on the Canadian business. So we're obviously repatriating that that is what increases our gross margin. When we translate those sales back out to the business in BioSyent's hands, the sales will be in the $2.6 million range without any addition of new customers. But importantly, will give us a lift of about $900,000 on EBITDA. And for perspective, that would represent more than 10% lift on what we expect our EBITDA margin would be in 2024. So all around an attractive acquisition that fits well with our business, a business that we understand, and done at attractive valuations. You can see from the purchase price, and if you can connect that to our balance sheet, we're well capitalized and we have capital on the balance sheet, so there's no need to borrow against this opportunity. And in fact, we're delighted to deploy capital into something that can offer us a return representative of buying assets at less than 5 times EBITDA. But importantly, we have capital available and the intention to deploy capital into further acquisition opportunities as we move forward with the business. Thanks very much for your time and attention.